Good evening, everyone. In this video, this is the second lecture of Bollinger Bands. Yesterday, I covered how to change the color of Bollinger Band. How many bands are there? There are three bands of Bollinger Bands. How to change the settings of Bollinger Bands. How to change the SMA time period of Bollinger Bands. Today, I'm going to cover that what are the mathematics behind this Bollinger Bands, how this works, and what are the meaning of each band. When the candle touches the upper band, what are its meaning? When the candle touches the lower band, what are its meaning? So I'm going to cover the formula and what are the meaning of these bands of or is this work or not? You have to test it. I always say I can tell you the concept, you have to test it. We both have to do the observation. If you can do the observation, then I am very much open to knowledge. So without wasting any time, let's get started. You did some screen recording of this video. So today the indicator we are going to cover is nothing but Bollinger Bands. So I am going to apply Bollinger Bands, which I'll pick from here. This is nothing. It's the most basic Bollinger Bands. Why is it not visible? Yes. This is nothing but the most basic Bollinger Bands. It has three lines. Red line, blue line, and green line. All the three lines we call it as bands. This is upper band, this is middle band, this is lower band. The red one is the upper band, the blue one is the middle band, and the green one is the lower band. All the three bands have some mathematical formulas. So the formulas of all three bands are nothing but middle band is equal to the 20-day SMA. SMA is simple moving average. The meaning of simple moving average is, suppose I took here 20 days simple moving average. It means I will take the 20 days prices of a stock or anything, stock or bonds, anything, the 20-day prices of stock and divide it by 20, which means the average of 20 day I'll take and make a band. So suppose here the band represents the 20-day SMA of these candles. Why just 20-day SMA? The 20-day SMA because this is the default setting of TradingView. 20-day simple moving average is the default setting of TradingView. So I'm not changing its setting. I'm just putting as it is. If you want to know, I'll show you the proof that this is the default setting. See, the length is 20. The basic MA type is SMA. So This is the 20-day SMA. This is the default setting of TradingView. If you want to change, you can change it. But I'm not going to change it. I am putting it as it is. So this is the formula of middle band. Now the upper band. So the upper band is nothing but the middle band plus 2 multiplied by standard deviation. So what is the formula of the upper band? Upper band is nothing but 2 multiplied by the standard deviation plus the middle band. So this is the middle band. We will add here 2 multiplied by the standard deviation, which means this length. You can say it as this. This is nothing but 2 multiplied by the middle band. Upper band is middle band plus 2 multiplied by the standard deviation. And what is the standard deviation? It is a statistical term. I'm not going to I'm not going to move so much of detail of standard deviation. So basically, the meaning of deviation is if there is some value and some value is from that. So how much this value is deviating from this value? Suppose this is a value which is 5 and some value 2, 3, 4, 5, 2, 3, 4, 1. So how much this 2 is deviated from 5? 3. And how much this 5 is deviated from 5? 0. How much 4 is deviated from 5? 1. This is the meaning of deviation. And what is standard deviation? It is a statistical term. There is a formula, there is a way to find standard deviation. But in this class, we are covering Bollinger Bands, but not standard deviation. So I'm not going to go in details of this, but this is a statistic concept, statistical concept. So you may know this is fine to understand this. Now the chance of lower band. So you guys may guess if upper band is middle band plus 2 multiplied by standard deviation, what would be, according to you, what would be the lower band? You may guess this. Oh, I'm not going to search the symbol. This is nothing but middle band minus 2 multiplied by the standard deviation. Yes. Similarly, the upper band is middle band. What is middle band? Middle band is 20 SMA plus 2 into multiplied by standard deviation. And the lower band is middle band minus 2 into multiplied by standard deviation. So, in general, what do people say? That the, hope my spelling is good. Yeah, my spelling is right. The Bollinger Bands are nothing but simple moving average mm, plus minus 2 into standard. So, in general, people say that Bollinger Bands are nothing but simple moving average plus stat 2 into standard deviation and simple moving average minus 2 into standard deviation. So, this is not that important. You must remember this formula. This is very fine. I just told you some extra. Okay. So now we know what are the formulas of this Bollinger Bands. The formulas are middle band 20 SMA, upper band middle band plus 2 into standard deviation, lower band middle band minus 2 into standard deviation. But what are the meanings of these bands? How they are significant to our market research? If this candle touches this upper band, so what is the meaning of that? If this candle touches this lower band, then what is the meaning of that? If this candle touches none of the band, then what is the meaning of that? So now we are going to see that what are the meaning if this candle touches this red band or upper band. So, if the candle touches this upper band, which means your stock or your market, whatever is it you are trading or investing, it's your call, is nothing but overbought. If your candle touches the upper band or the red band, it means your market is overbought. Then what are these overbought and oversold stock? I already covered this in my earlier videos in my YouTube shorts. You may go and check there. But if in very short, if very in very short, I'm going to tell you overbought means if the candle touches this, the market may fall down because it is very overpriced. And if the candle touches this lower band means this green band, then your market is considered as oversold. Again, what is the meaning of oversold? You may go and check out my YouTube shorts. Here, I'm going to tell you in very short. Oversold means if the market touches this line, then it is so much, then it is sold very much that now buying pressure will be there. And it is overbought means it is bought so much, then now the selling pressure would be there, which means the overbought and oversold. So if the line touches this red line, which means the market is overbought. If the line touches this green line, which means the market is oversold. If 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 the market is squeezed, if these both bands are very much closer to each other, this red line and green line are very much closer to each other, which means the lines are squeezed, the bands are squeezed, which means if the bands are squeezed, it means the market is very much less volatile. What is the meaning of volatility? I already told in my earlier videos, but I'm going to cover it here also. Volatility means in what speed the premiums or the price of the stocks are changing. If the speed is very much high, then the market is very much volatile. Like a stock price is moving from 1 rupees to 10 rupees to 5 rupees to 8 rupees very faster. And what is the meaning of low volatile market? Meaning of low volatile market is the price is moving from each price to from 10 rupees to 11 rupees very slowly. The price is staying in that premium, the price is staying in that price. Like 10 rupees, it is 10 rupees after 1 minute, 2 minutes, 5 minutes, 6 minutes. Then after 1 hour it will be 11 rupees. So the market is very much stable. We call it as a low volatile market. The market is moving very much fast, either upper or lower. The market is moving very much faster. The premiums are moving very much faster. Then we call it as, wait, I'll tell you. The market is moving very much faster. We call it as a very high volatile market. And in this Bollinger Bands case, if this is very much low, if this width is very much low, then we call it as a low volatile market. We call it as a very low volatile market. And if this width is very much wider, see, this is not wider, this is very small, this is shrink, this is very much shrink. And if this width is very much wider, then we call it as very, then we call it as very much high volatile market. So this is squeezed. What do I wait. This squeeze section is a very low volatile market, and this is a very wider section. The red line and green line are very much far from each other. Then we call it as a very high volatile market. Hope you guys understand what is the meaning of the volatility. If the Bollinger Bands are so much closer to each other, the red line and the green line, then this market is a very low volatile market. If the Bollinger Bands are very much far from each other, this red line and this green line, then this we call it as a very high volatile market. If the candle touches the upper band, then we call it as a overbought stocks. So this may be, there may be what do I say? There may be a chance of the market will fall down. If the market touches this lower band, then we call it as a oversold stock. There may be a chance that market will go up. The formula of this all three bands are middle band 20-day SMA. SMA means simple moving average. 20-day is 20-day compulsory? No. 20-day is the default setting of trading view. Upper band means middle band plus 2 multiplied by standard deviation. Lower band meaning middle band minus 2 multiplied by standard deviation. What is standard deviation? A statistical term which we are not going to cover in this class or this session. Not a class, this session. So these are the meaning of Bollinger Bands. Does this Bollinger Bands really work? You guys have to decide if this work or not. My work is to tell you the concepts. You have to decide if Bollinger Bands work or Bollinger Band doesn't work. So hope this session is very much clear to you all. Is of Bollinger Bands. Now let's see once how to change the video. But okay, I'm again going to tell you. See, the length is 20 because I took 20-day SMA. I told you earlier. What is SMA? This is the SMA. This is the SMA. Moving. If I increase the offset, What is the meaning of this term offset? The meaning of this term offset is nothing but shifting something parallel to itself. This is the meaning of offset because the offset is zero like this. If I turn on the offset, it will shift little bit parallel to itself. This is this is the style. If I want to change this blue color, I'm in middle band, I can change to anything. If I want to change, I can change anything. If I want to change the lower band, I can change. If I want the line maybe line with breaks, a step line with breaks, I can change anything. How this price line will look. These are the visibility seconds, minutes, hours, and all. So hope this Bollinger Bands are very much clear to you. I really hope you must like this video and you must like this session, the how this Bollinger Bands works, what are the meaning, what are the mathematics behind it, and does this work? You have to backtest it. You may tell me. I would love, and I'm very much open to knowledge. If you are going to tell me if this really works or not for your stocks, for your market, I would be very much happy. So thank you so much for watching this session and happy, happy and what would I say always happy and loss free trading and investing because if you're loss free, you are a very much big trader. I must say. Thank you. Thank you so much. Thanks for watching.